I got 5 stocks that are going to make you stupid rich. They're going to be exploding in September, going into October. These stocks, I'm literally all in. And the first stock is going to be called Nimbus. Okay, so Nimbus Group, its major business is supplying AI infrastructure and cloud services, especially large GPU clusters optimized for tasks like modeling, training, and inference. That's right. I'm investing in a company that is part of the AI trend. And here's what they actually do. Number one, high performance computing, HPC. Here's a stock, by the way. It's currently trading for $91 per share. And over the last 1 month, it's up 27%. And in 6 months, it's up 250%. That's a whole lot of money that was made on this stock. Now, high performance computing, they create massive clusters of GPUs, special processors good at AI math. These clusters are used for things like training large language models or LLMs and running inference when the AI answers questions or generates text or images. Number two, cloud services for AI. This company, instead of every, other company that buys its own expensive supercomputers, Nimbus rents out their computing power through the cloud. So customers can log in and use it on demand. This is very powerful stuff. Now, number three, full stack platform. I love full stack companies, okay? They don't just give raw chips, they also offer storage, networking, developer tools, and management software. So customers can build and scale AI projects a lot faster. Number four, partnerships, okay? So I'm investing in this company. I'm telling you, this is a smart investment, in my opinion, right? I'm not a financial advisor. This is just a company that I would put some money into, right? Depending on your risk tolerance. Number four is partnerships. They team up with big tech players. Recently, Microsoft. That's why this stock is absolutely firing in all cylinders. And there's bicep over tricep money in this company because they have partnered, okay, with Microsoft to make their infrastructure available inside existing cloud platforms. So Nimbus completed a capital raise recently as well, and that attracted a particular notable participant. And that participant is massive. It's NVIDIA, okay? The undisputed leader, absolute leader in AI chips, not only became an investor in this company, but also established itself as a strategic ally, lending Nimbus a level of credibility that few other companies can claim. So, very interesting. And I think that this company can actually be a $200 stock if the partnership continues to grow their business. Now, Nimbus's entire AI infrastructure is actually built on NVIDIA GPUs, so the H100, H200, and soon the B200 Blackwell chips. Now, these GPUs are the backbone of training and inference for large AI models. Without NVIDIA's chips, Nimbus wouldn't even have any competitive AI clusters. But instead, they are absolutely killing it, and their partnerships is something that I'm very, very bullish on. Now, let's talk about networking plus the software stack for this company. So Nimbus doesn't just plug GPUs together; they actually make them work at scale. They use NVIDIA's network tech, so NVLink, Spectrum Dash X. Thousands of GPUs can talk to make each other fast enough, right? So they're very good at their software stack, and they also rely on NVIDIA's CUDA and AI software ecosystem overall. So I kind of see this as a play within the ecosystem, just like the general AI trend. I think this is a good investment to have some of your money in, and specifically, it's also because the huge Microsoft deal. So Nimbus secured a multi-year contract with Microsoft worth $17.4 billion over a 5-year time frame. Possibly, that could possibly be even bigger depending on the demand. And this gives Nimbus both big revenue visibility and long-term credibility. So it's really a signal that large tech companies are relying on Nimbus for their infrastructure. So their Q2 revenue showed massive year-over-year revenue growth. Massive amounts, like 600% according to some sources. Just doing some simple math, and this basically makes it so that their valuation upside is very compelling for investors. And some analysts, by the way, have raised their price targets to $130 per share, based largely, of course, on the Microsoft deal. So there is some speculation on this play because it depends how well this Microsoft deal goes into the future. But it's a 5-year contract, so I'm asking myself, can this stock go up another 125%? It's up 250% in 6 months. Can it go up another 125%? And I would say that, it's an interesting bet. It's possible. So, market cap's at $21 billion. P ratio is definitely not light, but this is a company that can make literally stupid amounts of money from its partnership with Microsoft. So that's the first stock. Let's go to the second stock, which is Archer. Archer's had some rougher performance over the last month, but that actually makes me more bullish in terms of like getting in at the right price. So this company over the last 1 month is down, and over the last 6 months has done very well at 24%, which is a very amazing return. Now, overall, the reason why I've been looking into Archer is because of the eVTOL market growth. So eVTOL, electric vehicle takeoff and landing industry, it's projected to grow 35% annually through 2030. So this is a long-term bet. This is a stock that I would say that it's a wait and see. It's driven by urban mobility, defense applications, and automation demand. And I think this company can be a $12 to $15 stock in a reasonable amount of time. And long term, it can be a $50 stock. It really depends on their advancement in their relationships. Now, another reason why the stock is down a bit is because of a capital raise that they recently had, which really scared investors. Investors get really upset kind of when a company raises capital. It's because of something called dilution. You have less stake in the game because the company has raised capital and has now more money lended to other people, essentially, right? So this makes your share of the company less. Okay, so you're getting diluted. And companies usually do this to either pay off debt or stay afloat. In Archer's case, they are doing it to stay afloat. They don't have a whole lot of money to work with. They don't have a whole lot of revenue. So they do have to dilute some shareholders. But I don't think this is super bad, because if the money is used efficiently to create long-term value, then it's okay, right? In Archer's case, it's still pre-revenue, guys. So in my Discord community, people say, when is it going to hit 10? When is it going to hit 15? When is it going to hit 20? This is a more speculative play. My two plays are more speculative than my next three plays that I have in this video are like more easy to predict. But this company, I think it's a good bet for the long term. In the short term, it's hard to say, because they're raising money right now to stay afloat, because a lot of it depends on their future relationships, and they're just trying to extend their runway right now because they are burning a lot of cash. They're burning a lot of cash, and they're pre-revenue right now. So the stock has been running up based on sentiment, and a lot of retail investors like you and I are betting on its future, and the future looks pretty good in my opinion, because of the U.S. defense budget shift. So, like $900 billion U.S. defense budget is shifting towards autonomous drones, AI mutation, and nimble defense contractors. So that really is favorable for Archer. And when they lock in a contract, it's going to be massive, and the stock's going to increase a lot. So we're kind of waiting, and it's a kind of a difficult game to play, of course, to wait. But you need patience to be a good investor. A lot of analysts here have it at around $9, $10 per share. Some are a little bit higher at $18, etc. But yeah, I think this stock is a really good one to invest more into. Next stock I'm going to talk about is going to be Shopify. Shopify is a very good stock. 6 months, 56%. Man, been making all kinds of money, all sorts and all kinds of money on Shopify. This is the operating system for e-commerce growth. E-commerce is a massive trend, so I like trends. Shopify is doing very well because, look at social media. It's one big funnel, and there's a lot of money coming from social media. People are buying a lot of products online. People are buying services online, information online, and Shopify is really at the bottom of a lot of those specifically physical products. So Shopify, they're not just really a website builder, although they do that. It's really the backbone of millions of online businesses. And over the past 10 years, this stock has skyrocketed massive amounts because they're really the infrastructure. They're processing a good amount, or a nice fraction of all online transactions. The global e-commerce market is already 6 trillion. Guys, it's 6 trillion. That's a huge amount of money, and it's growing very fast. E-commerce is a very fast growing market in the US. Just 16% of retail happens online, but it's increasing very quickly. And that increase is going to benefit Shopify as more businesses use Shopify. I mean, I've seen a Mr. Beast video where Mr. Beast was sponsored by Shopify, right? Reaching, tens and hundreds of millions of eyeballs online Shopify is good at marketing, and they're gaining more traction as an online backbone, really. So I think investors should love Shopify even more. It has a recurring business model. Recurring business models are the strongest business models to be invested in because it's consistent cash flow, and that's what investors want. The P ratio here is 80. Market cap's 188 billion, so this is not really a small cap stock. It's a pretty large cap stock, and for good reason, but I think it's going to grow even more. This company can be easily growing into a $250 billion valuation in not so long of a time. So if you're looking to make, 20, 30%, I think that is possible with Shopify over the next, several months here because they have a very strong recurring revenue model plus subscriptions, payment processing, shipping tools, capital, lending. It's a full suite of services that create predictable, scalable income. And over the last year, Shopify generated over $1.7 billion in free cash flow, right? That free cash flow happened, by the way, with $9.4 billion worth of revenue. So they're bringing in really healthy margins, very large margins, because all software businesses and online businesses, they have an advantage where they don't have to have physical stores. So Shopify is a software business, and as a software business, they have a very nice margin. That margin is very lucrative to investors, and software is one of the best places to be invested in as a hedge for your own the job market, etc. Software is amazing. Software is the best. People are getting really, really rich off of software, and it's really exciting because all the traffic that happens on social media from Instagram, Facebook, TikTok, a lot of it is evolving into like shopping hubs, right? So like TikTok has TikTok store, Instagram, they also like sell, creators can sell stuff. Of course, on YouTube, there's a lot of info businesses that sell coaching services, etc. And a lot of this does go through Shopify. I personally use Stripe. Well, I was using Stripe. I'm still using Stripe indirectly, actually. So Stripe is a company, a huge company that's going to go public pretty soon. Speculation that it might even be this year, although the chances are low. And by the way, I know that because Robinhood, which is another stock, by the way, we'll talk about soon, it has prediction markets, right? And in prediction markets, it actually, one of the predictions is like which companies will go public this year. Klarna, Stripe are two of those companies that are you can bet on if they're going to go public or not. And the chances there were like, I think it was like 20-ish%. So it's low. That'll happen this year, but it's possible. So anyways, Shopify is kind of like a similar kind of competitor, sort of. Well, similar business model in some ways. All right, let's go over to the next stock, which is going to be SoFi. So SoFi, guys, I love SoFi. I said it was going to be 30 billion. It was 30 billion. Now it's 31 billion. So let's go. We're 1 billion up. Let's go. Let's go. We got hit 30. Now we're at 31. So let's go. Let's go, investors. Subscribe. Let's keep making money. My information is going to get us richer, wealthier, and closer to retirement. I'm already there, but my job, or my goal, not a job, my goal is to get you there as well. All right. So let's go 31 billion. We're on our way to 50 billion. Let's go. All right. So SoFi, great stock. I like it a lot. SoFi, I am going to continue to be bullish on. I think if you're looking to get stupid rich, if you're looking to grow your wealth, can't really overlook SoFi as they have a very strong member flywheel business right now where their LTV, the lifetime value of a customer, is continuing to increase. So we'll talk about Robinhood and their expansion in a bit. The reason why I'm invested in Robinhood is their expansion, right? I'm always looking for expansion. Robinhood has expansion. Shopify has expansion. SoFi also has LTV expansion. So I'm looking for expansion in one way or another, right? That's how businesses make money. They either get more customers or they charge their customers more or they upsell those customers. SoFi is very good at that. They have learned to play chess, not checkers, chess, right? They're playing a really good game. They have a very strong financial matrix. And once you're in that financial matrix, you are going to be getting upsold, right? And that happens because SoFi starts with one product. And then as you have a good experience, they personalize their experience further and they get you on more products. So you might come in on a product like a student loan, which is, by the way, amazing because a student loan, you're probably somewhere earlier on in your life, like studying and everything. But then in the future, you're going to need credit cards. You're going to, eventually buy a home. And when you buy a home, you usually get a loan, right? You don't have the money to do so. So you put, 20% down, you get 80% mortgage. That's a home loan. Or, just go into investing. So SoFi is really capturing the entire financial lifespan of a customer and all of their financial needs. And I love that because they get customers in the door with a pretty low cost. It's called CAC, cost of acquisition. So they have low customer acquisition cost, right? CAC, customer acquisition cost, or cost of acquisition, both same thing, right? Or pretty similar. So they have a low customer acquisition because they get customers in the door through either sponsorships like they have SoFi Stadium, or like partnerships with influencers or NFL, or just like SEO content marketing. So SEO, search engine optimization. So like Google and like other search related stuff on Google. So Google, very, very nice business that's helping. And I made a recent video on that, which isn't popular because Google's not a sexy stock. So nobody watches it. But people that actually want to get rich watched my the other video that I made the other day on Google, which is, I think, a $4 trillion opportunity. Anyways, SoFi, cross-selling, upselling engine is very strong. Student loans, you just come in under a student loan, then you get like the psychology that they have behind upselling you is just amazing. They have a lot of data-driven personalization. So I can see the stock. I mean, look, 6 months up 130%, man. That's freaking wild. That's wild. If I go to the chart on SoFi, I just want to show you kind of where it is on the chart, because one thing that I personally look for is Bollinger Band. Right now, we're just in a very high momentum swing. The Bollinger Band is increasing. The moving average, look at that. That red moving average is just up like a straight line. And look, I think the momentum is going to continue for SoFi. I really believe that the business is going to continue to do very well. The next stock that I'm also going all in on is Robinhood. I've been a customer for a long time. By the way, what I'm thinking about doing with my own Robinhood portfolio is I've been actually using a lot of the money from my portfolio. I've been withdrawing, and that's kind of hindered the growth of my portfolio. I've been needing some cash as I am traveling in Eastern Europe, and I want to get a property. Although my portfolio is pretty good size, I'm not getting as much growth because I'm withdrawing money. I'm taking money out. So if you're a long-time subscriber, I do use my portfolio to fund my lifestyle, and I do live mainly in Eastern Europe. So I do a lot of travel from Estonia to Poland down to Eastern Europe, and even more east sometimes as well. So I do use the funds from my portfolio here. Alrighty, so Robinhood, I think that it's a strong business because they are acquiring customers just like SoFi is, and they're also having their average revenue per user grow. The video that I did yesterday where I covered Robinhood and SoFi, I talked about average revenue per user being at 150, or is $151 roughly per user that they're generating. So again, through Robinhood Gold as well as other products, they are playing the same game where they're collecting customers and then collecting a lot of money from those customers. So I would be invested in Robinhood. And look, stock's currently trading for $109 per share. I said this is a great investment to hold. I think it's going to continue to be a good investment to hold. And I wouldn't even be surprised to see Robinhood go to like $200 per share like in the next 12 to 24 months, given that 1 or 2 year time frame. Like, can you imagine doubling your money? You're going to be sitting there on the beach like this, just hanging out. Like, people are going to ask you like, hey man, how you so chill? How are you not working anymore? You invested in Robinhood. I invested in AMD. I invested in SoFi. I invested in Nvidia. I'm a good investor. You're going to be hands back right here. Maybe you're smoking a cigar. You're good, right? If you're all in on the right stocks and you get good results, listen, you don't got to work. I'm not working. I don't work. And I'm fairly young and I'm not working because I'm a good investor. I invested properly. All right. So guys, really take this stuff seriously. You can actually change your life within like under 10 years by investing properly, dollar cost averaging, putting money in your portfolio, and using options to scale. Right now is like literally the best time. So I'm telling you, Robinhood is a good investment also because Robinhood Gold subscribers just hit a record 3.5 million users. So I think the technicals are strong, the fundamentals are strong. Demographically, they have a lot of strengths as well.